Yeah. Let's see if this works. Good afternoon. Good afternoon, everybody. The chat in here doesn't typically work. I'm not sure why on YouTube, but no big deal. Anyways, good afternoon. It is, well, or good morning. It's 10:50 here, Central Time in Florida, and that means it's only 8:50 in the morning in California. Like, that's absolutely nuts to me. I feel like I've been up for hours. Well, I really have. So let's talk about the ES futures. I'll let you know what you should have saw the video from earlier from our morning trend. But now I want to give you just kind of a recap and tell you what my expectations are into the rest of the day. Personally, we want to be um, we want to be out of most of our positions right now. And if you're in long-term positions, you just, you can kind of manage them. And to me, that's the trendy way of trading, right? I don't want traders to have to stick in front of the screen all day. I don't want you to have to take profits and then jump into trades and feel like you need to be in more trades and then give away your profits. Matter of fact, if you made profits and you want to stick in front of the the trades, or you want to watch, I would only use partial profits to trade with. Okay, because the trendy edge is in the way, and I'm going to explain that really quick. So we are starting here on the ES futures over here. This is your weekly. This is going to be your daily. This is your 4 hour. And over here, this is my think or swim. So this is trading view on the left hand side. On the right hand side, this is think or swim. All right. And we're going to go over all of this. And I'm going to tell you why I believe it's a good time to just kind of hang out. And it's the same thing that I've been going with for the last 2 days. Let's start with the weekly chart on your left hand side. We're going to zoom in here. Notice that we have this body. Okay. Not to get too deep into things, but I have a video out there on YouTube that shows you the inside and up and inside and down formations. What I'm looking for here, okay, what I'm looking for the week is for the formation to at least start what we call an inside formation. In order for that to happen with my methodology, we're going to be looking at the body, not the wicks, just the body of this candle. So far, all of that is coming true. We're hanging within the previous week's candle. And therefore, if you're looking at iron condors or you wanted to scale in, you would be selling put credit spreads here. And as we push higher, you're selling call credit spreads here. Whether you want to use SPY, SPX, ES futures, it's all the same. The ratios are just a tad bit different. Over here on the daily, well, before we move on, what's important is I basically am saying that we are range bound. Okay. We're range bound for this week. All right. And I think that you could see a little bit of, volatility decrease. And so just be careful. Don't go too far out of the money. Don't expect anything crazy because, again, we could just be range bound. All right. So in here, let's just say range bound. All right. Right there. Over here, what is important, and the same thing is important here, is the trendy edge. Okay. This is resistance until proven otherwise. This edge has been here for months and months and months. And that's what's cool about the trendy methodology, is that I'm able to give you levels far in advance and teach you what to do when price gets there. Okay. So when price is underneath, we understand that this is resistance until proven otherwise. And then we go to shorter time frames in order to trade that bounce, okay, up to what is now resistance, right? So let's go ahead and look here. On the daily, this is telling me that the cloud is very close to being confluent with the trendy edge. So this entire area right here is resistance. I wouldn't expect too much unless price can push over and create a base above here. Notice that all of these candles that have come here before have rejected at the trendy edge. Okay. So the probabilities are high that this is not a great setup to go long into an edge, right? So if anything, you want to be taking your profits here and waiting to see if we can create a base. Let me go ahead and show you what that base would look like. Now, the structure doesn't necessarily have to be exactly how I'm drawing it, but the first thing that we want to see on the daily is that we can close above this level here. Okay, so this could be a hammer by the end of the day. It could look something like this. That would be the first thing we're looking for. Then I would expect it to pull back into support, and then basically a higher high above this next edge, which is 38.63. So going forward into the rest of the day, I must look at this 4 hour. This is what set me up to feel bullish this morning, and we were as cool as a fan, literally. There were no, hey, we got to buy puts down here at the bottom. We did this exactly how I'm showing you. And you could see here, the 4 hour really gave me the idea that this was a great V recovery setup, because the trajectory from the rejection of the trendy edge, look how sharp this is. Absolutely no reason for the sell-off except that we hit some supply, but we've hit it so many times. It was a great opportunity to scare retail traders as we approached Jerome jumping on the mic, right? I think all of you guys would agree that. So always remember that. I've taught that over the last couple sessions when I go live, is that the news is a catalyst that pushes price into one of our levels. Okay, and if you have an event coming up like FOMC, Jerome's talking on the mic, Buller's talking on the mic, earnings, any of that type of stuff, take and jot down what's happening into that event. So if we know that Jerome is speaking the next day and we pushed into this level, then I expect a pullback into the morning where he will then speak, and then price then pushes back up. It's the opposite if, let's say, Jerome is speaking and price had pushed down into a trendy edge. I can't make these up, by the way, guys. These are literally bouncing right off my levels, and this is how we trade them. They were here before price was there, okay? And our members can definitely let you know that. So here it is, you know, it's just what side of are you on? Are you going into resistance when Jerome talks, or are you going into support? Forget about what he talks about. That's for later. We're just here to trade. I'm not here to anchor, right? I'm not a news person. I'm not here. You're not turning on the channel to listen to my opinion of what I think the market's going to do because of what these guys are saying. I'm giving you technical analysis, okay? So, V-shape recovery. And then over here, notice that I have a 4 hour on. We actually had this on the 5-minute chart this morning, and I want to go ahead and show you that. Let's wait for this to load up a little bit. And it was a great recovery, by the way. I mean, we were down like 60 points this morning, right? So if you bought that bottom, that was pretty sweet. Anyways, so what do I expect right now? You know, just chop to sideways. I think we're trying to base out in here. We need to close above the YE. Sorry, that means yearly edge here at Trendy Trading. And if we can create a base or close over that on the day, then I think things will look really pretty. Now, let's go over this. Okay, this is important. Over here on the 5-minute chart. Okay. The 5-minute chart, we started to change on momentum here from the red candle to the white candle to the green. We basically momentum change, price broke above the cloud, and then we started to push up. Our targets from this range, and we had a risk this morning of only 4.7 points on the momentum change. That means my stop would be at around 5 points, okay, on ES or micro and so forth. And then we trade this up into the trendy edges. I coached this the entire time and was looking for what we call the line in the sand. That's that blue level right there, guys. Okay. Notice we came up there. We pulled back. We then went bid, meaning buyers stepped in. And then we pushed up into, and I gave you these levels this morning actually out there on Twitter. All right. So these are the levels that I gave you and told you that this was a supply zone. So in supply, we expect prices to pull back. It's not that easy. We must chew away that supply in order to move out of that supply zone. And that is a timing variable. Okay, we need time. You can't expect this to happen right away. All right. Give me 1 second. I want to reset this really fast. I don't know why Thinkorswim is just acting really slow at the moment. I apologize. Okay, let's go back to the 5-minute. Wow. There we go. Okay, so we have the TTM squeeze down here, and I just want to show you some confluence with the overall move here. You can see that price tightened up within the cloud. We got the momentum change, all right, from red to white to green here. And at the same exact time, we started to show that basically sellers were exhausted, you know, from red to yellow. Sellers were exhausted. I started to notice the color change here. We went bid above my script here called the PMZ pre-market zone. And then we started to show momentum here on the TTM squeeze. Everything was lined up. This was a great trade to the upside into resistance, which is the trendy edges. Okay. Now I also went short off the ES right off of this edge here. This is what I expected. I want to show you how I traded this. Is basically I saw the topping wick. Again, I'm going to keep reminding you guys, I have a topping wick video. It takes a few minutes to watch there on Trendy Trading YouTube page. Okay. And it gave me that extra tool that I need, or that confidence to go short. As soon as I saw the topping wick and I understood what the trendy edge was there to do, resist or reject, then I shorted for a quick 5 points. Now that's just intraday trading. This obviously gives you a lot more points than that, but I was trying to show that you could trade this both directions just by using these indicators. Okay. The next thing is I want you to notice as current price is hanging out at what we call the line in the sand. The line in the sand is a very important pivot point. It is not a cash close. It's a little bit different. It's based on structure. Okay. And so this line in the sand for right now is a major pivot. This trendy edge underneath here is a major pivot. If you look down and to the left, you can see structure here. And that's why we're finding buyers showing up at this level. Overall, the big picture is what you should be focused on at this time of day, folks. The European close is closed. People are enjoying their summer. People are not necessarily enjoying the market. And so you have to find something to do. And that's where we teach the beach trade. Now, mind you, you can take the word beach out and replace it with anything in your life. TV trade, right? Dog walking trade. Like something between the stop and the target. I want you to live your life. I want you to feel and understand the confidence of trading with the right levels. If you can go into each trade and understand what your risk is, and what you could possibly lose from that, that's going to give you the confidence to execute. You cannot do anything. You are just like one little speck in an ocean, right? The ocean doesn't know you're there, right? Neither does the market, believe it or not, okay? If you're listening to me, most likely you're not an institution, okay? You're not trading with multi-millions or billions of dollars, and you're not putting that type of trade behind just one trade or that type of money, okay? So again, you're very small in comparison to the overall market. So why can't you live your life and still trade? I've really focused, and this time in the market has been very humbling. You know what I mean? It teaches you that there are a lot of things outside of trading. You can do awesome other things, like, again, go to the beach. You're either going to hit your target or you're going to get stopped out. I promise you those are the two things that are going to happen. You're either going to lose money or make money. And when you can accept that, you can pull the trigger. It's that much easier. Okay? Now, a couple things here. Again, we have a little bit of support going. All right in this area, right where these green arrows are. We'll look for buyers to come in. We're going to, before I jump off here, I'm not about to jump off. I'm going to go over Amazon and a couple other things. But before we jump off at ES, I want to show you one trick with your Fibonacci. we're just going to take today's range, okay? And I want you to use the pivot low. Give me 1 second here. Forget that I'm looking at a 5-minute chart. There we go. All right, and we're going to use this pivot low here. I won't go into great detail. If you're wondering why I use this pivot and not this pivot, there is a specific reason, but for right now, let's just make this a little bit quicker. But I'm going to use 100 to 0. You can see how I place that. And the 618 is your golden Fibonacci. Basically with ES Futures, I don't want to see price drop below 37.39. If it does, this trend that I measured is then broken, okay? And the higher probability is that we come back to this little red box around 37.14, where I feel pretty confident we will find some buyers there, okay? So just let price do its thing. Let it hang out in this area, okay? All right, the next thing that I'm going to take a look at is USO. So I had a great trade in USO, and I did a conditional order, and I wanted to roll. I was out 56 days. We made 111% total on that trade, all right? And I placed a trade as soon as price came up into the 23.6. I went short again, and then my stop is just right above here. Now, what I'm doing is I'm using partial profits to trade this. I could literally let this go to 0, and I would still make money on the trade. Okay. However, being a good steward of my money, I actually have a stop in that's conditional. If it breaks over a certain level, I will be stopped out. Current price is at 81.68, and basically it needs to get a little bit higher, and then I could see a stop out there. Okay. And again, that is USO. This bad boy, I was very excited and still super excited. We got that short, right? But man, I would love to see it just roll over in this area and head right back down to around $80 to $79. Okay? I'm happy no matter what the outcome is at this point. We have made money on this trade, and it's been a very good trade. Let's move on to Amazon. So Amazon was looking really, really good. It's pulled back a little bit with the market here, and I want to show you some more levels. Now, what did I do? I'm out over a year, or just under a year, on Amazon, okay? I've trimmed it. It was currently up around 46%, 48% on these leaps in this area. When I trimmed earlier this week, I said, you know what? I'm going to go ahead and go for a butterfly. All right, so the butterfly, the sweet spot is right up here, and look how close we got. And then we pulled right back. This is how I wanted to approach this, okay? If this pans out and we find buyers, say, around 108.27 into 107, and then we head right back up and close today around 110.5, I have a pretty high probability that we could close above 113 by Friday. But we'll have to see how the rest of the day shakes out, okay? So again, that's Amazon. I don't really want to talk about the long term because again, I'm almost out of year. And let's go over here and take a look at pins. I started this position yesterday. Let everybody know also that I started this position. This was up about 7% this morning. And again, these are really far out for 2024. Let's go ahead and go to the monthly chart. Just want to show you what I'm looking at. So this is a really ugly chart. I'm not going to lie to you, you know. Look at this. The sell-off is absolutely incredible, in my opinion. It just kept going, right? And could you imagine being trapped in this with shares, you know, thinking, hey, this is a long-term trade? I just can't imagine. I personally cannot imagine, you know, being somewhere up here, say you bought around 85 and today we're trading at 18. I feel bad, you know, but, you know, there's one rule that's pretty straightforward. If you break 38% of this range, I would be out of the trade, you know, 38% from a Fibonacci standpoint. And then some other people would say, hey, I'll drop or get out of this if it drops below 21 EMA or something like that. You can also use the cloud. Now, one thing that I like is from a range perspective, or sorry, structure perspective, we've come right into what I would call a buy zone. We are going bid. You can see that the wicks on the bottom show us that there is some buying pressure here and people are trying to buy in this zone. The next thing, notice that I have this purple level here. This is just showing you, this is what I like, a rounding bottom in a buy zone. The rounding bottom typically starts with a higher low, and that's exactly what's going on right now. There's a higher low here. Okay, so again, you're buying 2024. I'm buying 2024 here. I'm not too concerned about like what's happening today, but I am paying attention to the monthly candle, and I would love to see the monthly low continue to be a higher low within that zone. All right, and then we'll look at structure going into July and August timeframe and see what we can get. The divergence right now says if the buy zone holds, we could be looking at prices up towards 29.34 in time. Okay, so very long-term trade. This is the way that I want to approach trading right now because in my mind, I'm actually going to be wrong. I want to scale in. And because I've already accepted the fact that I can be wrong, there's no hurt feelings here. Okay? If anything, I get the opportunity to add if it comes to me. I do want to be careful during this time frame and understand that I want to start with a number in mind. So, for example, hypothetical, let's say that I want to buy $2,000 worth of pins for 2024. I can start with a quarter size here. Okay? Quarter size, meaning I spent $500. And if we drop some more, then I'll buy $500 more. In fact, this is almost like a savings account for me because it's so far out. I realize that I'm putting $2,000 in there. I'd like to save that. I'm not looking for results right away. Again, this is a very long-term trade for me. A lot of things can happen between now and then, okay? All right, so let's go over here. I want to show you guys really quick. I was just stopped out on my oil roll, and I just want to show you the transparency that we have here at Trendy Trading. I don't even have to do anything. I didn't write anything. Yeah, I don't have to do anything. You could hear it in the background, and within milliseconds, it's right here. And you could check the time and sell if you wanted to, just to confirm, but it's right there. I love this. So notice this morning we sold for $6.25, made 111%, almost 112%. I then went ahead and bought and rolled. It is a roll, and this was set up as a conditional order on open, and that trade was explained on a video I will release shortly. All right, so boom, there we are. We got stopped out for 32%. Not a big deal. We paid $1.79. Got out at $1.20. We made 111% over here. You can do the math. There's no way that I'm lost on this trade. However, I just want to say this because there are traders out there who, unfortunately, go to services and they're just looking for alerts. And what happens is that traders do not have the courage to take these trades when price is moving up. Okay, so when I bought this, USO was moving up into a sell zone. Okay, and so they don't feel the confidence, but it takes a little while. But then for some reason, most traders live down here. Okay, they want to sell on the lows, or sorry, buy on the lows. Okay, they want to buy on the lows, or they feel the FOMO, which is really important. Listen, I'm very transparent. I want to talk about all this stuff. They get FOMO, so instead of taking this trade when it was the right time to take a trade, they decide that this is the trade for them. All right? Do not put yourself into this category, folks. Do not put yourself into this category. All right? Learn a process, stick to a process, execute that process. Being consistent is what's going to pay off for you guys. Okay? Don't have FOMO. If you feel FOMO, walk away. Come back the next day. Okay. All right. So just wanted to show you a little bit of transparency and how that works. Let's go ahead and what do we have over here? Spreads. Okay, cool. And here's all my spreads that I take as well. And you can see those as we go through there. Okay. All the percentage gains and losses. It's all there for the taking. You got to love it, right? Try to stay as consistent and transparent as possible. It shouldn't be possible. We're very transparent. Okay. So you can see buyers did step in around the trendy edge and around this green arrow, showing you that indeed we have buyers sitting down there. The question is whether they hold. It does look range bound. Let me make sure and see if there's anything else I need to cover as far as my positions go. I don't have to do this with you guys, but I'm really trying to help traders out during this moment because I feel like it's very difficult for a lot of people. Okay. A couple rules. Try to stick with only a couple trades. Once you close out a trade, whether it's for profits or a loss, count those number of trades again and make sure you're sticking to the same number of trades. Okay. Try not to overtrade is my point. All right. Let's see. Let's go here to all my trades. Okay. We talked about the Amazon butterfly. Talked about Amazon long term. I have pens long term. We talked about that. We talked about USO. I'm completely out now. And it is possible that USO could now start dropping since I have my stop around the 618. It is possible, but I'm not going to FOMO anything. It's not a big deal. We made money, so we're good to go. All right. So I did go over all those trades, and then I recently took a trade. Let's go ahead and take a look at that on Apple. This is in the small account. I have two different accounts here. One's a margin and one's a cash account. And when I say small, it is really small. And so it puts me into perspective. You know, how much can I spend? What am I looking at? I try to take, setups that are going to work out. So we had two trades in there today that worked out very well. And here, let me go ahead and show you once again what that looks like. This is the small account right here. And so 36% on XLV. Right? Not bad, not bad. And then we have Walmart the other day. That was 50%. Apple, 25%. And I just took Apple right here not too long ago. I think it's breaking down a little bit. Not a big deal. Again, be managing and monitoring that. And then that pretty much sums up everything. Apple, what I'm looking for just really fast is, let's go over here. Oh yeah, down 30 cents. I think I bought it when it was up 60. So it's already dropped almost $1. I think those deltas are like 25. So it's probably down like 25 bucks or something. So anyways, on Apple, we need to go to at least a daily. Give me 1 second here. Or a 4 hour. 4 hour or a daily is fine. Give me 1 second here. I think it was the 4 hour that I'm trading off of. It is. All right, so this is interesting. So I want to show you guys this a little bit. This is the trendy edge, and this trendy edge is the resistance right now. And so price needs to push up over the trendy edge. I want to see a close over this level. And if we can close over that level, I think we could do well. All right, wife's calling me, so I got to take off. I really appreciate all of you. We'll talk soon. Have a